after some time now, after a long time in fact, Amit Jeswani, founder at Stallion Asset Management, with us on the show. Amit, good having you. Thanks much for joining in. The last few weeks would have been terrible for most money managers. But how's the situation looking now with the globe doing what it is doing? Would you be putting more money to work right now, or are you sitting on the sidelines?
Hi Neeraj, thank you so much. Good morning and thank you for having me here. Yes, it's been a long time. We were actually applying for the PMS license and we got the license and we were deploying that money. See, the way every bull market and bear market is exactly the same. The bull market are all about earnings growth and it's about how much you're going to make. The bear market, on the other hand, it's all about balance sheet quality and promoter quality. So in a bear market, all market wants to chase is high quality promoters, low debt. See, there are four kinds of business models: B2C, B2B, B2G, and G2B. G here is the government. So the government businesses get like just thrown away, whatever be the case. The B2C kind of businesses, which are high free cash flow generating businesses, zero debt. Those are the businesses that do well. So for now, we are placed in the high quality side. So we always have a portfolio of like those high quality compounders which grow at 15-20%. So that's one category where we have added considerable weight now. And as soon as so we strongly believe that in the next 3-4 months we will have a sizable bottom in all global markets, and from then onwards India should start one of the largest bull markets. So that's basically our thesis that we are working with. There will be a leader of the bull market, and that is the leader where those leader stocks will go up 5, 7, 10 times. So that's where you need to be placed in the next bull market. So for now, in the short term, it's safety of capital which is more important, and the long term, but you have to chase that growth rate because that's where big money would be created.
Okay, Amit, and we'll talk about where do you see potential leaders as well, what pockets, etc. But just wondering, in the near term, you know, we were just looking at what's done well and what's not. Let's for example talk about one usual suspect pocket, which is autos, which have come off quite rapidly. Even after the falls that we've seen, brokerages are coming out and downgrading stocks. Case in point being Goldman Sachs on Hero MotoCorp the day before yesterday. What are you doing with the large cap auto names? And I'll give you a few names to sample with because they are the most widely owned in the retail space as well, or the PMS space maybe. The Hero MotoCorp or a Bajaj Auto of the world, a Maruti Suzuki or Mahindra & Mahindra, at best an Ashok Leyland. What do you do with some of these larger names?
See, I'll tell you. So in the auto space, first of all, I'll speak about the entire consumption space. 2-3 quarters back, you could see that Symphony was reporting -20, -30% growth in sales in the India business. Then, you know, if you see last 1-2 quarters, it's the AC companies which are reporting very tepid sales, like negative growth in sales. And now the same thing has moved towards auto side. Now, if you do a dealer check, like the dealer check that we have done, Honda sales are down at least 30% this month. Maruti sales are down at least 22% this month. So the dealer check that we have done is not so good for the auto companies. The question is this a temporary phase or is this a long-term phase? Only God knows that. But for now, auto is not a good space to be in. Like, I would not be buying auto. It's okay if I buy 5-10% expensive, but I need to see clarity that am I going to see that 10-15% volume growth that the market was estimating, because the markets were estimating plus 10-15%, and here you have -15% growth, and you will see the numbers this quarter in all auto ancillary companies and all those larger names that you said. You will definitely see the numbers coming in. The orders are extremely weak.
Wow. The question then, Amit, is that, I mean, one is that we talk about the recovery and when will it come about, which is fine. The point is, do you reckon that because of these numbers, and again, we don't know whether the numbers will revert or no, so the market will only react to what the data that comes out. Let's assume the data is as bad as your dealer checks are suggesting. Do you think there is a very high probability of stable names like the Marutis of the world coming off in the first fortnight of January?
It's possible. You can't rule that out. See, with consumer names, with higher quality names, market actually gives them a chance for 2 quarters. In a bad quality name, if 1 quarter is bad, the markets will make the prices go down 30-40% in no time. But in these consumer kind of franchisees, there's a lot of people who are buying for this dip. So, you know, the correction in these kind of stocks are at start little slow, but when market gets confirmation for like 1-2 quarters that this is not going to grow at 10-15% what we initially expected, you will see a markdown. So that might happen. So that's a problem area, to be honest. See, there are 2 sectors which are not doing well at all. One is real estate, like the 90% builders out there. Of course, the 10% is doing better. But if real estate is connected to 200 industries, so you saw the fall in, let's say, a Greenply or Kajaria or those tile names. Kajaria has done better, but the other guys have fallen 70-80% in no time. So the whole building space is facing a lot of problems. Consumer spending has slowed down clearly, and you need to see now if this is sustainable or what's going to happen, because the valuation in consumer companies are not cheap. So we're selectively still bullish on consumer companies, but the discretionary spend is what we're looking at very closely of what's going to happen there.
Okay, interesting. Amit, stay on. So much more to talk about. We will talk about those pockets where investors should be positioned in as well, according to Amit Jeswani. What else? I was looking at the broader end of the spectrum and what has come off quite a bit, not just yesterday, but over the last few days, and specialty chemical companies have taken a bit of a stick. Amit, do you track this pocket? Technically, I mean, or rather fundamentally, the currency correction 70, 71, 72 should be positive for some of these companies. It helps them in a big way. Even the import substitutes will benefit the likes of Deepak Nitrite, etc. The stocks are coming off. SRF the last 2 or 3 days has taken a lot of stick. Some of the others too have come back. Do you track this pocket? Any particular company that you like out here?
See, we track only one company very closely, that is Aarti Industry. So that's doing a good job. But see, chemical again is a cyclical business. It can be good. India can become a bigger manufacturing hub in chemical, but we take chemical as a cyclical business. As long as the cycle holds, until now we are holding actually Aarti Industry in our momentum product. So we're holding it. It's about the 200-day moving average. So I'll use Chandan's words a little bit here, but till the time this price action is good there, it never fell during the fall. It's very close to its lifetime high. Till the time it's showing the right price action, we're there. And the day it doesn't show the right price action, because we don't know, 35 PE for Aarti Industry, we don't know it's good valuation, bad valuation, because chemical companies historically have traded at 5-7 PE multiple. So, it's a very difficult thing to say that what valuation is the right valuation, but those guys are growing well. Till the time they're growing well, we'll be there in it, and if the price action doesn't move in our favor, we might exit there.
Okay. Interestingly, Amit, while staples and companies like HUL, etc., and you gave your view there that these guys don't require money to run the business in a meaningful way, and therefore the return ratios are usually very high, and therefore they'll continue to trade expensive. What about the non-FMCG but in the consumption space companies? So again, I'm limiting my conversation to the ones which started showing some chinks in the armor in Monday's session, and Jubilant Foodworks, a couple of liquor companies, etc. Consumption but not staples. What do you do here?
See, overall in the consumption category, these companies, there's a huge opportunity size. So you need to just buy them on dips, okay? And whenever you see them down 20-30%, and that's what we've done actually, to be honest, that whenever we see a good, very high quality, good ROC debt, see, there is a difference between a mid cap. When a mid cap falls 30%, sell it. When a large cap, debt-free company, which is growing at, let's say, 20%, falls 30%, okay? It's actually cheaper by 50% because the growth is 20% and the stock price falls 30%. So that is the time you buy those companies. So
give me an example.
What we do, we have a clear distinguished. I will not be able to take like example. It's
no, not exactly consumer,
but we bought a gold finance company when it was down 50.
Okay, never mind. Finish your point, Amit. Finish your point. Gold finance company.
Yeah, so that was one day the stock was down 15% for no reason. So that's when we just got in and bought the entire block that was there. So you know, those, like example, like that was an NBFC which I'm speaking about. That's one space that we were long for a long time. So we've been long financials from 2015 to 2018. I would say we were like 40-50% in financials, because that's where the larger growth was. So in between 2015 to 2018, your Nifty was growing at 1%, right? Like Nifty EPS growth was 1-2%, whereas your private financials were growing at 20, 25, 30%. So that is where we were placed. Now we've cut down the weight in the private financials, but we've cut down weight from 40% to about 22-23%.
Okay.
But I'm sorry, I'm
no, Amit, give me a point.
Going to a different topic, I think.
No, Amit, completely fine. But I'll come back to the topic. But let me just address the pre-open session. It's about to start any moment now. And I'll come back to this conversation, not on a different topic, completely related, but just come back to you in a bit. This is how the pre-open rates are looking right now. We won't have the green, so please don't get miscued by this. These are just freak trades. We will start off lower. We cannot start at 10,700. This will come off a bit. Let's give these rates a chance to stabilize. What could be causing this? Well, a multitude of factors, including some freak trades on large cap names. Let's wait and watch what happens there. But bring up HUL. That's a stock in news, and I just want to see if that is reacting at all in the session today. Well, marginally off, so not too much. You know, stocks like IndusInd Bank have a 5% uptick right now. I think that will correct itself, and therefore the Nifty have a more reasonable rate coming in. I think today it's a lot more volatile. Reliance has this 1.5% uptick. I really doubt that will happen as well. So let's just wait and watch what happens. Top losers from Monday's session, the two-wheeler companies, Hero MotoCorp, Bajaj Auto, they're corrected quite significantly. They look like they'll start off weak in today's session as well. Amit, Jeswani's dealer checks suggest that select companies, I don't know the individual names, but that auto sales have floundered. And let's wait and watch if that continues to weigh in as we near the end of the month and the year, and the numbers start trickling in the first. What else? Ultratech Cement has this unnatural 6% downtick. Let's wait and watch. I think that will get corrected too. Vedanta, stock in news, about 1.5% higher. I think not too many mid caps in news either. HUL is probably the large name in focus on basis of news, and that stock is down about, well, 1.5% as we speak. Any big movers on the other side? SRF, which was down 8%, about a couple of percentage points higher, so do watch out for that. There is weakness in Thermax and a Kalpataru Power. Kalpataru Power was, I think, grinding lower in Monday's session as well. Let's wait and watch what happens there. Vinati Organics looks like starting off slightly lower. Let's wait and watch what happens there too. And lastly, Jubilant Foodworks should come up on your screen. Had a fair bit of short positions being piled on in Monday's session. Very close to expiry. The stock had cracked about 6%. Let's see what happens here. Avenue Supermarts, the last but not the least. It's actually not as liquid as some of the others, but let's see if that is already trading. Well, it could start off another 2% lower after not having the best of days in Monday's session. Okay. The currency and the bond yields, and let's see what's happening there. By and large, there seems to be a belief that the dollar might just weaken against larger currencies across. I don't know if that is playing out on the rupee today, but 69.79, there is considerable strength out there. 34 paise in the green. I don't think this has got anything to do with the rupee's inherent strength. Yes, the crude fall helps, and I think that could be the other factor that could be playing in India's favor. But I think by and large, the belief is that the dollar will not strengthen with all that's happening in the US. So 69.80, I don't think anybody's complaining right now. What about the crude, the bond yields as well? 7.24. Again, crude price fall should aid the macro, and that's not something that one should scoff at. So good going for these names as well. Okay, good, these macro themes as well. Back to our conversations, and we'll get to some movers in just moments from now. But Amit Jeswani was just making a point. And while we were moved on from some of the consumption-related names, Amit, you dwelled a bit on NBFCs. I want to talk about a couple which are these long-term secular growth stories, seemingly what have come off from the prices that they were trading at, the asset management companies. You were bullish when the IPOs came about. At the current valuations, and not necessarily the prices, but the valuations, do HDFC, AMC or Arnam offer value? I'm not saying that you are going out and buying them or this is a buy recommendation. I'm just wondering if you find value there.
See, absolutely. So Like consumer names that we were discussing, which fell 30%, which were growing at 20-30%, are like D-Mart, United Breweries. So those stocks did collapse 30% on the fall. Now coming back to the AMC basket, we do like what happened is after the IPO, the TER news came, and because of that we had a 20% fall in AMCs because the profit got adjusted. So you were expecting about 950 crores of profit in FY19 for HDFC AMC. It will happen in FY20. So that's the reason of the 20% drop and fall. The business is good. There is no problem in the business. The next 1-2 quarters they might not do well. They'll stay here for next 1-2-3 quarters, but this is a secular business. I have absolutely no doubt that these companies will give us 18 to 22% kind of returns for the next 7-8-10 years kind of period. So it's part of our core portfolio, and see, these companies will become dividend machines. So let's take an example of HDFC AMC. The equity involved in the business of HDFC AMC is 2100 crores, and it has 1900 crores as cash. So he's making 700 crores. The profit of 700 crores that HDFC AMC makes is on 200 crores. So basically these are like cash machines. The dividend payout is already 50%, and the dividend payout slowly will become 100%. So just like an HUL and all those kind of companies, these companies will be cash machines for us. So it is a very long trade. This is not a short trade. And valuations, we can go wrong on valuations for 1-2 years. We never say that it's not possible to say that 30p is good for a stock or 37p is good for a stock. So that is very difficult to say for anyone, I think. So these are for us, this is compounded. Now we make 4x or we make 5x in the next 7-8 years, 10 years. Let's see, I don't know. But we will hold these stocks, and we are absolutely bullish on that trade. And there'll be dividend payout machines for us.
Okay. The passion with which Amit speaks about these businesses is quite admirable. Amit, Jeswani, I really appreciate you taking the time out and joining us today and giving us your thoughts, and season's greetings to you and your team at Stallion.
Thank you so much, Neeraj. Same to you.
Thank you very much. Well, viewers got some ideas. I mean, of course, standard disclaimers. Please do check with your advisors before, or do your own analysis before you go out and buy some of these names. Okay.